Hey, Gabe. You're here a little early, but we're going to be starting in 15 minutes. Gabe, Jazz. Hey, guys. You guys can chat here. Don't worry, I'll unmute people. Um, hey, Barbs. Everyone hear me okay? Just chat. Yeah, we still have 14 minutes till we start. But if you guys want to ask questions here, you can ask now. So how's everyone doing? It's kind of cold in my basement, so if I shake a little bit in my voice, that's my fault. 16 degrees out here. Oh, if you guys have WhatsApps, please put your numbers here if you would like to be added to my trading group. Yes, WhatsApp is a sex hotline. Hey, you gotta be careful here. There's gonna be bars. There's gonna be adults here too, like a little old, kind of conservative. We don't hurt their ears. Let's see.
Josh, you already have my number, right?
Yes. How's your studying been going, Jazz? What's your favorite YouTuber that I sent you?
I've watched all the videos, not the playlist, not the $502 million list, but I've been watching videos from the same guy though.
Yep, that's good. I'm just gonna get my presentation out.
I mean, now I can think more along the lines of like when I look at like a chart or something, like I can tell like, oh, when I would have invested or something compared to like when I would have got out.
Yeah, that's good. Kind of like backtracking your um, trades is an important part. That's how you
Yeah.
have your like winning profitable strategy. But yeah, we're only gonna have about 40 minutes for this because of Zoom. I don't
Yeah,
know,
40 minutes.
but hopefully the presentation shouldn't take too long. Futures open in 6 hours or 5 hours, and futures are like kind of an indication for what the market's going to look like tomorrow. So I'm going to be looking at that later. Barb, Gabe, how are you guys doing? Love it. Every day we eat.
Green smoothies, eh? That's what we eat.
I'm gonna have that a little later. Oh my god, I ate so.
Nah, only on green days, huh?
Yeah, only on green days. If I have a green day, I drink a green smoothie. If I have a red day, I drink a berry smoothie. Actually, if you look at Warren Buffett, he's the most successful investor in the world. Um, every day he has the same routine. He goes to Don's, and depending on the market, he'll have the exact same order, and his wife will give him the exact change for him to have that order. Yeah, McDonald's.
That's fucked up. What the
So like,
fuck?
if the market's up, he'll spend $1.82 for a double sausage griddle. If the market's down, he'll only spend $1.31 for a egg McMuffin. And he does it every single day. His wife gives him the exact same change. And the thing about Warren Buffett is he's worth like almost $80 billion. But he drives the exact same car he has for the longest time. He's lived in the same house. His house he got it in the 1940s. or 1960s, I mean, and he hasn't changed it ever since. Again, he has billions of
I
dollars.
don't know why though.
That just shows consistency. What's up, Justoni?
Jeez, my guy's here,
Yes, Warren Buffett's a humble fellow. I'll wait for others to join.
Yeah.
How you doing, Stoney?
How you doing, fam?
So fun.
Hmm.
Yeah, I'm just like, how do I make myself not?
Yeah, don't worry. I'll
How do I make myself not in the video, man?
there you go. I got you.
This host.
Also, feel free to ask questions.
Gosh, the other day, MDGS dropped to like 240 after.
Yeah, I saw. That was quite a drastic drop. That's why we get in and out, right? We spend the first hour making that money, and then
Jeez, it's at 190 now.
so it's here.
Will I fall?
People. Yes. Sony has not had classes on yet. Okay, hopefully more people come in. Bloomberg, MX. Bloomberg is probably my best. We're gonna get into that in a minute. If I have a backup plan, I don't think I'll go over the limit, but if I do, then I'll just host another one, or I'll cut it short. Don't worry, this will be recorded. I need to hire someone to like make me videos in the future, or like edit videos. I'll make a YouTube video. Like I'll post it on YouTube. It'll just be easier for people and we can use it for future reference. I'll also be sending out the PowerPoint we used today along with the resources. And later on, I'll send out the details for the trading competition that hopefully people will.
You're not going to be in it, right?
What's that?
You're not going to be in it, or are you going to be in it?
I'm not going to be in it, don't worry. Yes, I will be starting a YouTube channel.
Let's go.
But it'll be like kind of recaps of my trades every day. Probably live stream every once in a while. Yep, yeah, definitely. I'll post my daily routine. I run 100 miles a day. No, 10 miles a day, 100 push-ups, 100 sit-ups. Be like that guy from One Punch Man. Got more people coming. How's everyone doing? Adriano, you can keep your
Adrian.
camera on, mic on. Seth's here, what's up?
Hi, Adrian. Oh.
People coming in. Hey, Marie. James is here. Start in 6 minutes.
Marie.
Adrian.
Yeah, I'm planning on Sundays to send out a newsletter to everyone on kind of like the state of what the week is coming up. At first, one of the first things we'll talk about once the presentation starts is the state of the economy. But once we start, I'm going to meet everyone. But again, feel free to ask questions in the chat during then too. Hey James, how are you doing?
Great, how you doing?
I'm all right.
Bro, you haven't added me to the WhatsApp group.
Not yet. I need everyone's numbers here. I've been trying to
okay.
collect people's numbers, but
Got it.
once we're there. Also, yes, thank you. I'm going to put it on an Excel sheet. 4 minutes. I also have an Excel sheet with everyone's emails already, so. Oh, Gabe. Dang. Saw Renzo in here earlier. How are you doing? Is your dad watching, Renzo?
Yeah, Josh.
That's good. That's good. Hey, Sonny.
How are you, Josh?
I'm all right. Getting ready to learn. Got more people's numbers.
Just Tony, I need a cut over here. I'm getting a little bit of out of whack.
Bro, I asked this guy for a cut too. He's like, nah, like my parents are not allowing. I'm like, okay, wow.
I mean, if the price is right.
Send his address.
Just Tony, fam, love your Addy.
Hmm?
Love your address.
Gerald is coming.
Yeah, just Tony, what are you gonna do if I just show up?
Yeah, honestly, that's what I'm saying. Like,
I know the chair is open. It's not like anyone's gonna be in it.
It's true. That's true. I don't know.
yo, all 13 of us might have to line up outside your place. Bro.
Maybe.
People are gonna be thinking there's a mask giveaway in the neighborhood.
See, if Josh hasn't gotten a cut, that means like he really can't give cuts.
Yeah. Facts.
Filipino parents different.
You do hit different. So where's Danny at? I mean, like, if Mega's in here, you know.
I might be going to Danny's house today actually with Gerald.
Oh, nice.
4 minutes. Everyone excited to
That
learn.
guy's always a dog alive.
Messaging a couple. Fuji comes in here soon.
Josh, what are you doing on Wednesday from 9 to 5?
What are you doing on Wednesday from 9 to 5?
You can work at Rebirth if you want.
Yeah, no,
He's got $200 to make.
yeah, a little more. Okay, get started in 1 minute. Yeah, I'll be.
Wait, you still work at Little Caesars, or did you quit there a while ago?
Me or Adrian?
Adrian, man.
No, I quit after 28 days actually.
Okay, start in 1 minute. G's in here. Okay. I'm gonna start sharing my screen. And we'll get started here. Yep, 1 o'clock. I'm just gonna mute everyone. Actually, no, just feel free to talk whenever, but yeah. Everyone can see the PowerPoint clearly?
Mm-hmm.
Yeah.
Nice. Okay, so first of all, thank you for everyone coming out here. If it's one thing today you take away, it's just not to be fearful of investing and trading. I'm going to be using the terms kind of like cooperatively with each other, but yeah, let's get started. So I'll talk about how I started trading. So I was 15. It was in Maples, the high school I went to. I read this book called The Wealthy Barber that talked about kind of like compounding and interest coming from your savings account. So a lot of people, or most people these days, put their money into a savings account that come with 2%, maybe even less than that, 2% interest, that compounds over years and years and years. The thing about that is it's very minimal, right? And things coming in like inflation, and then we'll talk about inflation later. Inflation causes your 2% interest to almost be nothing in the long run. So this guy, the wealthy barber, he talked about how, you know, you put away $250 a month into stocks with minimal return. It can be a 4 or 5% return at a low risk, and you'll start compounding these gains over the years. So from that, I got hooked, and I started learning more about investing in general. And you know, I started learning first before I started practicing, and I learned all the resources I learned from, I didn't pay for. Like, there's power in free resources. It just takes time to look for those, and they become a little bit more meaningful. Because if you pay for resources, you're gonna feel like you're forced to follow that kind of path, right? And if you pay for resources, let's say, oh, I promise you a Lambo in 1 year, you're gonna end up, you know, having unhealthy habits and an unhealthy mindset towards those resources. Also, if people have questions, just feel free to butt in here. So I didn't start trading until 2017, and that's about 2 years after I learned the basics of investing, and we'll talk about here. But it took me a long time, simply because I didn't have much money. And when I did start trading, I started very small going into it, and I plan to continue to trade into the future. So this book right here was the first book I kind of bought, and the only book, or not the only book, the only resource that I bought from like a promoter, I guess. And it really helped me understand the ins and outs of day trading, that is. And we're going to talk about 3 different types of trading and investing here. We're going to be talking about value investing, more long-term, swing trading, which is kind of midterm, and day trading. And hopefully by the end of this meeting, you can choose a certain style that fits you. So first, let's talk about the state of the economy and why now is a great time to start investing. So like recently we had a crash mid-March, kind of late March, of the entire economy. Things were dropping like crazy. There's a participant here. And with that drop, that created opportunity. You know, assets were decreased in prices, and that allowed kind of like a sale of these stocks for us to purchase in. Since then, the SPY, which is a measure of the entire market, rebounded, right? And soon there's going to be another crash, and that's going to be another opportunity for us. And that's why I kind of want to create like a group that eliminates fear of trading and investing. And there's some people who think like, and there's nothing wrong with it. People who think airlines are a good investment right now, they're not. Just because they got bankruptcy bails out doesn't mean that they're a great investment, because over time they will lose their value. Another great reason why investing now is important is because of inflation, right? So inflation is caused by the printing of money of excess amounts, and the government is printing money like crazy right now to help out with CERB, which is great, right? But that causes the expense of living to increase while our real income decreases. So if inflation is at 6%, and we have an increase of our income of 4%, we're losing 2% of our buying power. Along with that, our savings accounts that have like 2 or 3% interest are losing money, real value of money, as inflation occurs. So the best thing to do is to move that, you know, your savings or that cash into assets, you know, that are going to be valuable in the long term, and that will beat inflation and will increase your buying power in the long run. Another important aspect is oil, kind of like the macro trends. These are like all the trends that are leading up to the recession, depression coming in, that will create opportunity. And I want people to be prepared for when that comes, because when people are not, that's when panic happens. And again, it's kind of a negative way to think, but this is an opportunity for us. Becomes another participant. Sorry about that. Another fall is the mortgage crisis. There's going to be people defaulting simply because they're not working anymore, right? If you're not working, how are you going to pay off your mortgage? And those people that can't pay off the mortgage is going to cause a ripple effect, kind of like similar to 2008, leading into the recession. And again, I haven't even talked about coronavirus yet. The effects on that on the aggregate scale of people reducing spending, reducing money in the economy, that'll just create, the perfect storm. So before you start trading, there's really no prerequisites besides knowledge and time. And it's also, a lot of people ask me, like, should I get into trading or investing if I had debt? Or should I take out a loan to start trading and investing? And I recommend them not to take out loans. And also the first thing you should do is to get rid of debt before you start that, because you want to use your extra savings to, maybe you cut half of it into your debt and the other half into investing, kind of like growing portfolio. But obviously there's circumstances where we can't avoid debt, and otherwise, like, you should still learn the basics of investing. And there's a lot of misconceptions about, trading and investing. Investing is more long-term, trading is day-to-day. One of the misconceptions is like it's betting, right? It's gambling. It's not if you plan things out, if you do your research and you really understand what you're buying. Because at that point, if you're using high probability plays with low risk and you're eliminating kind of your risk factors, then it becomes an educated and well-versed decision. And it takes a long time to be successful. Like, I'm not even successful to any extent. And it's been a few years since I started learning and trading, and I have so much more to learn. And that's one of the key aspects of this practice and profession is you gotta be willing to learn, and you gotta read all the time. You gotta have wisdom. You gotta understand what's around you, really. And you kind of you build a different mindset towards that. And yes, avoid buying courses, because a lot of them promise you, $1 million in 2 years or 3 years, or, be able to quit your job, because this is not a get rich quick scheme, right? It takes time and it takes effort to really learn the ins and outs of trading and the different aspects of it. And with that, I recommend most people to not start with day trading, because day trading is emotional, it's high risk, it requires a great amount of time to study. And the first thing I tell people to do is to start with investing, value investing. Here are the basics of investing, kind of like the layout of how you should be spending your money depending on where you are in life. The older you are, you want to have less risk. Younger you are, you want to take on more risk. So investing, the reason why I use the different, investing and trading is because investing is more you buy and hold for the long term. So again, you purchase high value assets, and an asset can be like Apple stock with low risk, and that yield a consistent return over multiple years. And added to that, it can have a dividend too. And dividends are kind of paid out to you every month or every quarter months or every year, kind of like extra income for you just for holding that certain stock. And I recommend most people to start with value investing, because you really want to know what you're holding. And I refer to stocks most of the time as assets or securities or companies, because if you think of a company as a stock, you think of it as just its ticker symbol, right? SRPT or AAPL for Apple. And you don't think about the actual company itself. So when you're investing into something, think about it as you're really buying a part of that company, and you're joining to be part of that company as a shareholder. And it's more than just buying the ticker symbol, right? That gives you kind of like a connection to it, and that forces you to do more research. And there's two kinds of investing. For long-term investing, long-term is like 5, 6, 10 years horizon. There's value investing and speculative investing. So value investing is kind of like, it's more accounting-y, but you don't need to learn accounting to understand this stuff. It's just you understand the balance sheets, right? You understand the revenues of the company are being priced in less than what it should be. What value sheets? PE ratio, which is your kind of I'll talk about later, but you can look at your revenues, see how much debt there is. And this is more out of my field. That is long-term investing, because I'm young and I like to be more of a speculative investor, and you hop into a company right before kind of like a catalyst, and a catalyst we'll talk about later. That's a good question, Laura. We'll talk about that later on to the presentation. And these are like kind of the basics. So there's a bear market, bull market. Bull market means we're on the uptrend. Bear market means we're on the downtrend. Other things like market order, that's how do you buy your stock, is the bid-ask spread. You learn about things like liquidity, and there's two ways you can enter a stock. It's either you go long or you go short. Going long means you're betting that stock is going to go up, and you go short means that you're betting that stock is going to go down. And you kind of like average down depending on the price. So let's use Apple as an example. I think it's a great company, so I'm going to go long. By going long, I bet that it's going to increase in price over the years, which it will. Why? You got to ask why. Well, because their revenues are good, their market share is unbeatable. And one of the speculations is that I actually think Apple is going to create a Zoom product of their own, and kind of like beat out Zoom right now. But that's in the future. So right now I'm going to go into different YouTubers that kind of inhibit those philosophies and those aspects into their videos. And these are the people that I've watched over the years. One of the first people is Sven Carlin. He has a PhD in accounting, and he used to be an accounting professor. So he's really into balance sheets and valuing a company based on their balance sheet and their prices of their products. He's really more into the technical aspect, and he's a follower of Warren Buffett, Benjamin Graham, like those guys. Warren Buffett, Benjamin Graham, those guys are two like historic and greatest investors of all time. And for people who should, if you want to start value investing, follow those two. Another great YouTuber is Michael J. He goes even more into the technicals, and he provides free resources like spreadsheets so you can value your own companies using them. He also kind of breaks down people's portfolios so you can understand and you can base your portfolio around people like Warren Buffett, Bill Gates, and Ray Dalio. But the thing is, when you're investing and you're trading, you really want to create your own ideas and your own thesis. You don't want to follow someone's idea on trading or investing or a stock to buy just because they said so, right? You want to do your own analysis, your own valuation, and you want to ask your own questions, right? Because you want to understand. It's all about understanding and really valuing what you own, because that's hard-earned money, right? So you want to take the time to value your stock, and don't think about it just a stock. It's a company you're buying into also. Again, The Intelligent Investor by Benjamin Graham, an absolutely amazing book to learn about value investing. And then we'll go into an example right here. So one example is Sarepta. You look at the business description, you see where their market is and how they're serving the customers, see if there's growth in the customers. You see their catalyst coming up and the projections over there on the right. That's kind of like the accounting style of it. And it's a very simple projection where you kind of see the free cash flows. We'll talk about that in later courses and later seminars, but it's just the bare basics. So again, value investing is more into long-term outlooks onto things. And I recommend most people to start with it. It takes the less day-to-day effort and the less stress. The next example we're going to go to is swing trading. So value investing and long-term investing is more like a 2, 3, 4, 5 year, 10-year plan. Swing trading is like a month, maybe 2 weeks. So you start building a position, you start buying shares into a company before a catalyst or earnings. Or another way to do it is through the technical method is if you see a stock has been beaten up by the market over a long period of time, there could be an opportunity there for a reversal. So it kind of like goes down and you see it, why is it down so much? You think, why is it down so much? Maybe the market will realize this is undervalued right now. It's prime for reversal towards the uptrend. And some catalysts can include like FDA approvals, right? Or earnings can be, Tesla is expected to create, $1 billion of revenue in Q4, and they beat it up at like 1.6 billion or whatever, and then that causes the price to increase. Here's some YouTubers again. I'll be sending out this presentation to everyone. Ricky Gutierrez, he's great for technical swing trading. Every Sunday, he kind of does a stock talk where he sees companies that have been beaten up in the last month and sees them that are primed for like a reversal. He also looks at ETFs, which is equity traded funds. They kind of like pool together. They pool together. Nice, I just got a gift from Zoom, removes 40-minute timer, but they pool together, ETFs pool together a class of assets into one kind of tradable stock. It's not a stock, it's an ETF. But yes, he's great for looking at. And again, you want to use these resources to create your own ideas. You want to dive into these ideas. Another one is SMB Capital. So there are more options correlated, and options, I'll go bare basics. Options are derivatives of stocks. So they kind of bet on what the future price will be depending on today. They're really complicated, very high volatility, but myself, I'm learning them right now and I'm trying to perfect my strategy towards them. But as I get more experience in them, I will share with you guys how to trade them also, because they're great for hedging your portfolio. Hedging means you're kind of eliminating the risk of your other stocks. So if you're hedging, that means, okay, maybe one stock is Apple, another stock is something kind of like inversely correlated to Apple. So maybe Microsoft. If Apple's going down, maybe that means Microsoft is going up, right? That's how you hedge your positions. They're also very technical, more kind of intermediate experience, kind of hard to digest at the start. So this is for later on. So we'll use an example right here of swing trading. This was a catalyst trade of FDA approved stock, ITCI, Interstellar Therapies. Spelled therapies wrong, I think. But what you want to do is you want to go to Biopharm Catalyst, which I'll show you later. What it does, it shows upcoming FDA approval dates, upcoming clinical trial dates in which will cause the stock to soar. So this stock, I got in when it was $8, about a couple of weeks before the FDA date. December 23 releases. Remember, I got in $8. December 23, they approved, their drug got approved by the FDA, which caused the stock to soar to almost $44. So from $8 to $44, that's a huge difference. That's a $36 profit for share. So if you had 1,000 shares in that, that's a $36,000 profit. Again, these are very rare. They happen maybe 4 or 5 times per quarter. So you really need to do your research on them, and not every single stock or not every single pharmaceutical company gets approved in the FDA process, right? But these are speculative plays that you can add into your trading style. And you'll learn your trading style as you progress through your resources and just paper trading. Like my trading style, I do a mix of day trading and swing trading. Again, I'm young, so I haven't gone into my long portfolio yet, my long-term portfolio, but again, it's all based on you. And I recommend people to start with just value investing, really understand the stock you're in. And for swing trading, you get in at 1 week before. As soon as the catalyst hits, you get out. You know, you sell, you take your profit, and you do the same thing. You rinse and repeat. And now we're going to go into day trading. This is where most people probably see on like those YouTube ads that are like, you want to start day trading, you know, start making $1 million a year. I'll get you a Lambo or whatever. Day trading is not like, it takes years of practice and understanding really how to play, the different strategies to use, the different patterns to use. And there's a lot of noise out there that teach beginning day traders strategies that honestly don't work. You can look at different day trading YouTubers, and some of them will have like 10 graphs open or whatever. They'll have like 1 million different indicators on, but really it's about simplicity. The more simple you can make day trading and your strategy, the more profitable you will be. Because if you overcomplicate things, that's just too many things for you to keep like a track of, rather than just having, you know, 1 or 2 consistable plays. And the thing is, you're gonna get thousands of stocks thrown at you, right? Whether that's value investing, swing trading, or day trading. I tell people this: if you're playing baseball, right, and you never strike out unless you swing, right? Let's say you're playing baseball and you'll never strike out unless you swing, and you get 1,000 baseballs thrown at you, right? You only want to hit the baseball that's in your sweet spot that you know will be a home run. So out of those thousands of stocks, maybe there's only 2 or 3 that hit your sweet spot. But the thing is, if it hits your sweet spot, you know that's a home run, right? So there's no need to purchase every single stock that's gapping up or purchase Zoom because it's currently popular right now. You want to drown out the noise, and you want to create your own kind of mindset and investment outlook onto things, because that's what's going to make you propel yourself into the long run, right? You want to learn and you want to teach. You don't want to remember. I know they teach you this, they teach us this in school, but you really want to learn. So again, we'll go to the basics. It's momentum trading. So what happens usually is I use a scanner. I look at the scanner around 7:30 a.m. And the scanner will show stocks that overnight have gapped up by like 60%, right? And then from there, around 8 a.m., I draw support and resistance lines, and I'll talk about that later. The kind of like areas where I can enter and exit the trade. And then I plan my risk management of these stocks. We'll go into a case study in a second, and I journal those trades. And yet for day trading, you have to be extremely quick. And you have to cut out all emotions. As soon as you get emotional in day trading, you lose, right? You kind of got to be a robot when you day trade, because you let emotions kind of control you. The thing is, let's say you lose on a trade, you're going to want to make that money back, obviously. But what if your next trade you lose again, and you lose again, right? Then the next thing you know, your account's blown up. That's why I suggest most people not to start with day trading. But it can be profitable, right? If you make $300 a day, right, that is possible in the long run. So we're going to go into the basics. This is the first person I learned from in day trading, which is Ross Cameron. He has a video here, a playlist here. If you look at the bottom right corner, he turned $583, and this is all legit, into $1 million in 2 years, and recorded every single trade and every single play and what went through his mind. I remember like every single video he would put out, I would put it on before I go to sleep to kind of like prepare me for the next morning, like his mindset. He's a very calm guy, absolutely down to earth. He has millions of dollars, but he's very chill, right? Very humble. For those who missed my story earlier, there's this guy, Warren Buffett. Again, he's worth like $80 billion. The guy still lives in the same house that he bought in the 1960s. Imagine that, $80 billion still in the same house in the 1960s. And every single morning he does the exact same routine because that's what works for him, right? So Ross Cameron's great. Check out the playlist at 583 to $1 million, and you'll do good. Another one is Mad As Money. Okay, we're gonna go. He's a big hitter day trading. He goes in thousands of shares, if not tens of thousands of shares, and he can make $25,000 in 5 minutes, right? Or he can make $46,000 in one day. This is a huge trader, and this is like 0.0001% of traders out there. And then another one, this is kind of like the other side of the spectrum, Humble Trader. She's great for kind of small, consistent gains. And the great thing about her is she's Canadian, and she kind of answers questions like taxes and how to start day trading as a Canadian and using different kind of brokers. And Patrick Weiland, he's more into options and the psychology of trading. He's very emotional in trading, and he can help you out, kind of control your emotions while you're trading by seeing him trade. Sometimes you'd be like, oh my God, it's up 10%, 11%, 12%. And you should start panicking and being emotional, but really you got to stay calm throughout the entire thing. So we're going to go into a case study here. So the thing on the left is kind of like my scanner. I see it on the day and I have criteria. My criteria is the stock has to be under $10, has to have under 100 million float. Float is the amount of shares being traded in the market, and the volume needs to be around at least 1 million shares traded. We'll go more into this in future, or if you want to trade with me. And then before every trade, I want to have a plan, right? Because a plan helps you kind of stay consistent. So what to buy or sell. So the other day on Friday, I traded with my group, and we traded MDGS, which was a Medigas company. and we only traded for like an hour and came out with a decent profit. So what you want to do is you want to plan out how much to buy and sell and when to enter and exit, right? So for MDGS, we're going to talk about risk management here. MDGS, I wanted to enter around the $2.3 area. Why? The reason why I want to enter at that day is because if you look at the first red candle, I don't know if you can see my mouse, but if you look at the first red candle, you can see that that's kind of the level where it's going to, if it breaks that area, it's going to continue onto the uptrend, right? And I always have a plan, and I have, for risk management, I'll go really quick into risk management. You kind of want to have a ratio of your losses to your wins. So if you have a 1-2-3 ratio, that means for every loss, or for every win, you can afford 3 losses and you'll break even, right? So I said myself, I'm going to enter at $2.30. I'm going to have a stop loss at $2.15, and I'm going to exit at $2.70 for my profit, right? So if I win this trade, I can have, I can lose 3 more trades and I'll still be break even. And your ratio doesn't need to be 15 cents. It can be like 30 cents, 45 cents. And I recommend most people to have a 1-to-4 ratio, 1-to-5 ratio, whatever, right? 1-to-2 is basically gambling, so I don't recommend that. So this was a trade we did on Friday morning. MDGS was gapping up. This all happened before 10 a.m. and we got in at $2.30, exited at $2.71, and we made $173 profit, and that happened in 15 minutes or less. This is not going to happen all the time, but if you're able to kind of lock it down and have your plan ready, and the reason why we have risk management is to prepare yourself for that loss, right? If you are going to lose, you already know, okay, I'm going to lose, $40 on this trade. It's not emotional at that point, and you stop. You got to be disciplined. Discipline is such an important aspect of trading. You see over here, it went all the way to 340, but I exited at 270. People can be like, hindsight's 2020. People will probably like, why didn't you stay in longer? Well, I reached my target profit and I'm not going to get greedy, because what if it dropped down to $2 again, right? So stick to your plan, and that's kind of like the basics of day trading. Other resources I use is Biofarm Catalyst for my swing trading. Day trading scanner, I sent most of you guys this on the initial kind of email. StockTwits and Twitter kind of allows you to see other people's ideas. And for my charting, where you see all these charts, I use TradingView. And how to start investing and trading is start with a paper trading account for maybe a month. So I'll send out a link to paper trading. We'll have a stock market challenge here for the month of May. We'll talk about later. And really doing your research, and I'll send out guidelines on how to research, how to know what's a good stock, kind of filter out the fluff and the noise. And finding a mentor is key. My mentor was Ross. I watched him every single day. Even though I never talked to him in person, he was still kind of my person I looked up to. And Warren Buffett. Warren Buffett is, I love the dude. Right now, he has a $160 billion war chest ready to buy out multiple companies at a moment's notice when they become cheap enough. And you want to start your saving habits. Start saving money. There was an infographic I saw. If you cut out Netflix, which I'm not going to do, but if you cut out Netflix, you can earn another $16,000 by the time you retire by investing that, right? It's just, you got to start saving money to make more money. And you got to limit yourself and kind of budget yourself to force yourself into that situation, right? And you want to choose the right broker. I use RBC Direct Investing, and I'm moving to Interactive Brokers, but you can use your TD Investing, your CIBC, your Scotiabank, whatever. But that's later down the line. And again, I will send out guidelines and resources to these throughout the summer and so forth. I will be hosting a paper trading competition for the month of May. For those who want to join, it'll just be a $100 cash prize, but it'll allow people to understand and kind of trade and do their own research in the market. And the winner will also get a 1-week mentorship with me and live trading with my private trading group in the morning. So we trade from, usually we wake up at 8. Well, I wake up at 7, we meet at 8, and we trade till 10. And we've been pretty good so far. And just to wrap this up, I really hope this took out the fear in investing. and it will allow you guys to look into further resources to further your learning, whether that's through me or the resources I sent, because this is the best way to grow your wealth and your income. You let your money work for you, right? You're not going to lose to $0 if you know what you're holding, and really just keep learning, right? And you'll be great. Again, thank you everyone for coming out. And I hope to see everyone soon again. I'll be holding other seminars on specific trading, and I would love to hear questions from you guys. And please put in your WhatsApp numbers in the end. Barbara, Catalyst is kind of like, it's what's going to propel that stock to increase in value like overnight. It's kind of like if you were to talk about a movie storyline. You're welcome. A movie storyline, the catalyst is kind of like the climax point, right? That's gonna that's gonna progress the story, or it's gonna end the story, right? Once you're at that climax point, if it's a good catalyst, right, it's gonna progress that stock to go up, right? You want to kind of build a story behind your stocks that you pick. Yes, man just reminded me, please put in your WhatsApp number if you have them in here, and we'll be starting a private trading group, or just a trading group and investing group in general, where we can share ideas with each other. And that's an important aspect. Just keep sharing knowledge. Whatever you learn, share with other people, right? If you know someone that's kind of fearful investing, at least the best thing you can do is educate them and give them knowledge. And if you are successful in your investing and you're making great money and you're creating good wealth, give back. Like, there's a lot of people out there that are less fortunate than we are in the world. And your money can come out and make a huge difference. Obviously, you're going to help yourself, but one of my goals is to build 1,000 schools before I'm dead, right? That's a really important aspect. It's just educating, and education is a key aspect. But yes, thank you everyone for your numbers. Any questions? Like, I will answer anything. I'll be sending out a follow-up email with a YouTube link of this presentation, and then I'll be creating 3 different videos on more specifically on day trading, swing trading, and value investing throughout everyone else. If anyone else has any questions, I'll stop sharing here. And I'll unmute all.
Wow.
I'll hold questions for like 5-10 minutes. I will be sending also a link on the paper trading competition, which will start in May. I really hope people kind of go out and try that out, because that's how you start. Just start by doing, and you're not risking anything at that point.
Okay, anyway, I have a question. First of all, thanks, Josh. This is really useful seminar.
Thank you.
At the beginning of the presentation, you mentioned about we shouldn't buy stock for Ally at the moment, but I'm just curious, like why shouldn't we buy the stock for Ally right now? For instance, like Air Canada, I read the news like a couple of days ago. The government guaranteed that Air Canada couldn't go bankrupt. So why not?
That's a great question, James. They're not going to go bankrupt, but the thing is, once the earnings release and are out, that's going to cause investors to liquidate their positions. Obviously, we know that the earnings are affected by the coronavirus epidemic, but it's going to cause people to liquidate the earnings, and that becomes even cheaper for us to buy, right? Air Canada back in 2008 was at 50 cents. 2013, it was at $46. That's a crazy return. So it's kind of like, you got to be patient, because you don't want to be in too early. And sometimes if you can buy into Air Canada now if you think about holding it into the future, but if you want to be price sensitive, you want to wait till it's cheaper. A lot of people, I tell them who are a little older and have like RRSPs, kind of savings accounts, you try to treat your portfolio like your face at this point. Don't touch it. Right? You already have high value stocks in there. But that's a great question, James.
Okay.
Do you think the same thing will happen with Apple? Because like the earnings of Apple will come out in what, like 3 days, I think, or something like that.
Yep.
Does that mean like people will like liquidate their position even on Apple since like the earnings will be lower than the previous one?
Yes, I still believe that there's going to be another crash, another recession, or like another drop in the market before we kind of see the uptrend. The reason for that is because, again, inflation is going to kick in, earnings are going to kick in, GDP numbers are going to kick in, which are going to cause, like an overreaction from the market. And again, mortgages and defaults, and that's just going to cause things to be cheaper. So really, right now, you got to be really careful in what you buy in. My long-term portfolio, the reason why I have nothing in it right now is because I'm holding a cash position and I'm waiting for the right opportunity to get in there. It's a good question.
Thank you, Josh, for your presentation. I really found some value from it. I was just curious for the paper trading account. I'm not too sure about what that entails and how we go about with creating a paper trading account.
Definitely. So I'll be sending out a link to a site. I haven't chosen yet. It can be Investopedia. It's kind of like just a practice trading account. You'll get $100,000 of just play money, and you can go wild with it, do whatever you want with it. But you want to use kind of methods that you want to practice, so that when you get a real account, you'll be able to trade. And it gives you like kind of that feel of how certain news drives the market, right? The certain prices. Like yesterday or on Friday, Gildan, they were a company that was working on a cure for the coronavirus, kind of like not a cure, but a treatment for it. One of their clinical trials failed and it caused the entire market to drop, right? Just kind of seeing and understanding those things helps. So I'll be sending out a link and yeah.
Okay, thanks, Josh. And last question. You mentioned that the market is going to go on a second drop.
Yeah.
Since companies release their statement of earnings at different times, when do you think is best to, I guess, go into the market? Or do you think we should sort of like have a group of 5 or 10 companies that we follow, and then whenever their statement of earnings are released, then that's when we go in, rather than kind of like at the end of the second quarter? Because each companies have their own timeline per se.
That's a good question. Yes, definitely have a watch list of 5 to 10 companies. Because if you kind of limit it down to that, and again, you eliminate the noise and the fluff, you really do your DD. And if you know a company is valuable and you know the earnings hits and it causes the stock to like drop dramatically, if you know it's valuable and it's underpriced, that's a perfect time to buy and get into that. So the drop is going to happen throughout the second quarter and third quarter. So that's kind of like from now, May, till around October, November. And I think the bleeding is going to continue until at least we have a vaccine for this thing, called the rally. But yeah, it's a good question. You really want to have a small watch list of stocks you really understand and just know.
Talking about like watch list, do you think like will you be like making some kind of YouTube video or something more on like the pre-market watch list, or like what you think before like the market opens, I guess, like more on that, I guess?
Yes, I will be doing that, and kind of like the criteria I follow before I pick a certain stock or day trading, that is. Yes, thank you, Laura. Bleeding means, Barbara, that means the market is going to continue to drop in value. So that's the SPY. SPY is, again, the measure of the entire market. It's going to continue dropping in value because of the recession, creating a perfect or a great buying opportunity for us who are prepared for it. The 2 greatest opportunities in the market are before recession and after the recession, right? I mean, during the recession and after, because during the recession, you're buying out stocks cheaply. And after the recession, you're living the dividends and the value of those stocks you bought during the recession. So this is really a great opportunity for us. And that's why I want to educate as much people as I can right now heading into that.
Do you have like a timeline of when do you think the recession will be happening or something?
Yeah, we're already in a recession right now. For how long it lasts, no one knows. But I think, again, it's my opinion, I think it's going to go on till this year, like later on through this year. Because if we can look at previous studies, like in 2008 and the Great Depression, the recession lasted, at least 2008, it lasted for about a year before stocks started to go back up into their intrinsic values. And it wasn't until 2014 where stocks kind of went back into their pre-2008 levels. And like studying historic trends and historical events is really important in understanding where we are right now. And it eliminates that fear, eliminates that risk, it eliminates the emotion. Good question. Any more last questions before I end the meeting and send off to everyone else? Good. Again, thank you so much, everyone. I'll be sending out follow-up resources. I'll be sending out the paper trading competition. And I'll continue creating YouTube videos to help you guys and everyone else educate themselves. If you know anyone else who wants to get into this, I encourage you to teach them or send them my way. Thank you again. Hopefully everyone has a good Sunday. And I'll see everyone again soon. Thank you.
Thank you.
Thank you.
Peace.
Peace.